This episode of Talk Your Book is proudly brought to you by Honan, providing a complete range of insurance, risk and financial solutions.
Fundies called me up, told me to take a look, but stay stubborn as bulls and talk their own book. Get the money, get the money, get the money.
Well, John Forwood, thanks very much for making your debut on Talk Your Book. Really appreciate your time. I thought it'd be a good place to start if you talk us through the Lowell Resources Fund, and it feels like a pretty exciting time to be in resource funds management.
Yeah, thanks, Chris. Thanks for having me on Talk Your Book. Great to be here. So Lowell is it's an unusual fund. It's just focused on junior resources. We've been around for forever. I've been involved in the fund for the last 4 years, but the fund has been run by the current management company since 2003. So what's that? 17 years. And when the current management took it on, it came out of the AXA stable. It was a sort of a moribund unit trust with about 500 unit holders, and just invested in things like BHP and Rio Tinto, etc. So we now do, in the same sector, we now do the complete opposite. We invest in junior, high risk, high return potential opportunities, and it's across the spectrum of commodities. So at the moment, we're about 50% focused on gold, but we do everything right through to oil and gas. We've got about 10% of the portfolio in oil and gas stocks. So in between, there's base metals, copper, lead, zinc, nickel, battery metals. The fund's had some good success with lithium on the battery side of things. And we'll look at more esoteric commodities as well. So, we look across the spectrum. We're mainly focused on the pre-developers. So as I said, we're not, investing generally in the BHPs. We're investing in the guys who are exploring and developing and adding a lot of capital value, we hope, to their share price. And generally, not always, but generally we'll look to exit at that sort of development decision, where you get into arguably the more boring stuff, where there's a lot of permitting, financing, construction risk, which a lot of the time, junior companies doing it for the first time, it is there's a lot of pitfalls there for juniors. So generally we're focused on the exploration and feasibility stage guys.
And what stock do you want to talk about today?
Look, it's a stock that's very close to our heart at Lowell, one that we've been in since it listed in 2010. I think it was December 2010, a company called Predictive Discovery, PDI. We've been long-term supporters of the team there, really like their management and their approach, their geological approach. And, very pleased to say that this year it's that faith in the company has been rewarded.
Yeah, they've had a huge run this year. Maybe give us a bit of a background on what they do, where their projects are, and maybe a little bit of background on their management as well.
Sure. Look, they've actually got one joint venture, gold exploration joint venture here in Victoria, but really their focus has been West Africa from over the last 10 years. So they've got a lot of experience in that part of the world, and three countries in particular. They were heavily focused on Burkina Faso. They've joint ventured all of their assets there off to a Canadian company. Then they had quite a focus in Côte d'Ivoire, the Ivory Coast, and all of those assets have now been joint ventured off to what has become a joint venture with Resolute Limited, which is a major Aussie listed gold miner with a focus in West Africa. And recently, mid last year, they moved into a new country, Guinea, in West Africa, and took up a bunch of new reconnaissance permits, which have become exploration licenses throughout Guinea, based on their in-house predictor technique, or it's a proprietary targeting technique to identify areas in large geological terrains which they think will be more prospective for gold. So predictive discovery, it's all about gold. they don't look at any other metals.
And who are their management? And talk to me about what sort of skin in the game they have.
Yeah, look, the guy who leads the charge there is Paul Roberts. He's a geologist. He's got a very good pedigree. Has come out of the majors. Spent time all over the world. He's a Spanish speaker. He's obviously spent a bit of time in Latin America. And the generation of the company was this predictor technology was developed partly with CSIRO, and so this was a commercialization of that technology. So Paul's got only 1 or 2% of the company, but certainly in terms of skin in the game, he's put in the hard yards over 10 years. Hasn't been paid very much at all, and very dedicated guy.
And they've got exclusive rights to that technology, have they? They're not using that, not distributing that to any other explorers.
I think that's right. Yeah. Look, Predictor, that's not used by anyone else.
Yeah.
And yeah, it's a bit of a black box to me, but it's definitely worked.
And their capital structure, what's their market cap? How many options have they got? And what sort of cash have they got in the bank?
Yeah, so they've got about a bit over 800 million shares outstanding. They did a rollback, I think it was last year. I think they've got somewhere in the order of 30 odd million options, which some of which are in the money. That will probably, they're fairly long dated from memory, but that would realise about $1.6 million if they're all exercised. The current cash, I think at the end of the last quarterly, they had 8 million, but they've been spending that. So understand they've got about 6 million Aussie in the bank, which is say they're spending at 2 million a quarter, which is what they've been doing. Probably be a bit less this quarter because the drilling has had a hiatus due to the wet season in West Africa. Yep. They're about to kick off drilling again, but so they're probably good for another 3 quarters through to mid next year. But I would expect them to be raising money, well before they run out.
And the banking project is really what's put them on the map. And maybe talk us through a little bit about that prospect and what some of the ground they've got to drill in an upcoming sense, which is getting a lot of investors excited.
Yeah, so Bankan, I think they pegged that, maybe around August last year. They previously had a what you call a project generator model, which they would go out, peg the ground, and then look to joint venture it off to a bigger company to get it off their balance sheet and offset their risk. And that worked well while the industry was in the exploration industry was in the doldrums, and it was very hard to raise equity for junior explorers. But that's changed dramatically this year. And also, I had a lot of conversations with Paul Roberts, the MD, about if you're going to invest in junior resources, you want to get as big a bang for your buck as possible. It's a high risk sector. So you don't want to have a big success and then say, oh, well, we don't control this anymore. Someone else is, driving the bus on this one. So they adopted a new strategy last year. Let's get 100% of these projects. Let's use our in-house technology and go into a new country, Guinea, which, to be frank, is not the easiest place to operate, but lots of opportunity. So they used their technology. They identified, I think they've got 5 current permits. They had a couple more, which they did first pass assessment on and then dropped them, let them go. So they currently hold about 5 in the Seguri Basin in Guinea. And those all look prospective at various stages, but definitely the most advanced one is the Bankan project, Bankan tenement. Back in February this year, they completed a power auger, what they call a power auger program, which is a grid of drilling across a couple of the more prospective areas where there had been some historical artisanal mining and some rock chip samples which contained ore grade gold. But generally these areas are completely covered. There's no outcrop. You don't see ore zones at surface. So they had to do, shallow drilling. This power auger goes down, 10, 12 meters, takes a sample at the bottom. And some of the results on that were really eye-catching. I think, they were getting several meters at, 7 to 10 grams in this power auger technique, which is like a soil sample. And if you get, 10 grams in a soil sample, that is really extremely high grade. The market didn't really pay a lot of attention to it. The company did a small raising. I think they might have raised $500,000.
$0.005, wasn't it?
0.5%, yeah. Look, it's one of the best investments I've ever made. We put in 50 grand. We should have put in all of it. And so, when they got the bigger rigs out there, they did an air core program, and I think, the best result was 46 meters at six odd grams a ton. And that the share price went from 0.6% to 4.9 or something like that in a day. And the news was that's the biggest one-day rise on the ASX in 3 years. So they're now trading around in the low sixes, 6 cents a share, I think.
And so I'm not a technical guy, but when you look through their presentation, you see the diagram of the two different gold deposits in that bank and deposit, and the 3 kilometre space between the two. Is that the most prospective space that you're most excited about them drilling out? The
power auger is probably their most useful regional technique, and they're working towards infilling the power auger grid between those two zones in that 3K zone. But they're trying to drill on, I think, an 80 metre by 80 metre grid. So it takes, requires a lot of holes to fill that in. But they've had a couple of really interesting hits as they work from east to west, from northeast Bankan down to Bankan Creek. There've been a couple of high-grade power auger hits which need to be followed up. And then there's a new zone of artisanal mining a bit to the north, which has just been identified as well. So it looks like there could be a third northerly trending zone there. And then, there's probably the best part of still 2 kilometres to infill between the zones. So who knows what's in there. But often, geologically, you can get these, what they call on echelon zones, where you get a zone there, and then you get one offset there, and then you get another one. So it could actually be a larger zone that trends to the northeast, and on the northeast side of the project, completely untested. So it's very, as the company says, very early days, but to have gone in there from pegging it in August last year to being at the point of having defined 2 pretty major zones in 18 months, less than 18 months, it looks very prospective.
And they want to have a JORC resource out by the middle of 2021. I know it's early days, but what sort of blue sky number are you hoping for in terms of ounces that you'd hope they could have at a deposit if all goes as well as possible?
Yeah, look, everyone's got their own views on this. I think Hartley's, the brokers came out with a piece of research back in July, which sort of said, well, we think they, at that point, got their arms around, 500,000 ounces at least. They've definitely made some big strides forward since then. This morning they put out another announcement, 90 meters, a percussion drill hole, 90 meters at 1.9 grams per ton at the smaller of the deposits, which is, currently smaller deposits, which is Bankan Creek. So that is looking like, becoming quite a substantial zone as well. And Hartley's, back in July said, oh, well, we think they might only have 50,000 ounces there at the moment, but definitely looks bigger than that. So I think, initial resource next year, I'm optimistic that, they'll have at least 1 million ounces in that initial resource.
And it'll be able to be open pit mined?
Yeah, look, the company's talking, because it's such a wide zone, initially, because there was no outcrop, they went and drilled it in the wrong direction. And they drilled it from east to west, as you always do. Then after a bit of drilling, they realised, no, we should turn the rigs around and drill it from west to east so we get a true width. and they've been working their way down. The deepest intersection, I think, in some diamond drill holes is at about 150 meters deep, and it looks like it could actually be thickening at depth. If that's the case, then an open pit would probably drive down well below 150 meters, and it could drive down to a base at 200 meters plus. So yeah, it's a nice thick zone which should be very amenable to open pit.
And we know Cardinal Resources had a takeover offer from the Russians, and there is some takeover interest in the gold mining space. If things go to plan in the next couple of years, do you think there could potentially be some suitors for PDI?
Yeah, I think so. Look, West Africa is probably, up until we saw the Northern Star Saracen merger this week, West Africa's probably been the most fertile ground for M&A in the gold space in the last 12 or 18 months. Seen Cardinal be subject to a takeover battle between the Russians and the Chinese, and that's going for on a per ounce basis about $100 an ounce, which looks pretty cheap to me. We saw Resolute take out a private company called Mako Gold for their Toro Gold project in Senegal. That was done at about $120 an ounce. And then you've seen other deals like a combination of two Canadian companies, Endeavour and Semafo, which have got a number of projects across West Africa. We saw the Perseus and Exor. Perseus take out a small company called Exor, and that was done at several $100 an ounce. It's been very active. Generally, though, what you're seeing is it takes, you've got to get your projects reasonably well advanced. You've got to probably at least have a pre-feasibility study done on them at the moment to attract, a takeover bid. So, and I think, it'll be a couple of years before Predictive are in that space.
And so when you're valuing these sorts of companies, let's say you put a $100 per ounce valuation on a West African gold play, something with similar geology in a jurisdiction like Australia, what sort of premium would you put on that same deposit in a first world jurisdiction like Australia versus a West African jurisdiction?
Yeah, it's a great question. And that enterprise value per ounce metric or benchmark is moving all the time. It certainly, has increased a lot this year with the gold price, Aussie dollar gold price at over $2,600 an ounce. A typical deposit, in WA, for example, might have an all-in sustaining cost in operation of about maybe $1,200 an ounce. So you're making over 100% margin. So at $2,600 an ounce, if you're producing your ounces for $1,200, you're making $1,400 an ounce. And these takeovers, as a result, are getting done at higher and higher prices. So, you're seeing, 150, 200, 250, 300, being paid for projects in WA, and sometimes, north of 500. So this dollars per ounce. So there is quite a differential. There's definitely what we call an Africa discount. And that's, justifiable for sure. There are some real political ructions in West Africa and security issues. But, you saw, I think just last month, you saw a coup in Mali, which is a neighbouring country to Guinea, where Predictive Discovery are. And I was thinking, gee, well, share prices are going to get hit for all those West African gold miners today. But there was barely a blip. It's sort of almost like normal operating procedure. And often when these political ructions happen, the mining industry and gold mining industry sort of sails through because those industries are so important to those countries in West Africa.
Do you have any countries in Africa where you just feel that's just too hard and you won't go? You go to the Congo, for instance, or are there any countries that are just too much for you, or are you happy to explore anywhere?
Yeah, look, made some fantastic investments in a previous life in the Congo, in the DRC. So, I'm definitely personally open to that. I think, from a mining point of view, what I am wary of in Africa is the countries which generate a lot of revenue from oil and gas. And that's somehow seems to always muddy the waters in terms of the mining industry. The countries that have got an oil and gas mindset generally.
So that's Nigeria, for instance, to be in that category.
Exactly. Nigeria and Angola are probably two of the main ones, the biggest oil and gas oil producers in Africa or sub-Saharan Africa, I should say. So yeah, and then there's a couple of like Central African Republic. It's not the easiest place to do business. Places like Zimbabwe, very tough at the moment, have been fantastic. So yeah, look, but definitely more countries than not we're prepared to have a look at. Beautiful.
Well, thanks for giving us the tip. Look forward to putting it on the watch list and watching it from here. Thanks for coming on.
It's a great pleasure, and thanks very much for having me.
Thanks, John.
This episode of Talk Your Book was proudly brought to you by Honan, who go beyond a transactional insurance broker to deliver better outcomes for their clients. If you're enjoying Talk Your Book, make sure you subscribe to Chris Judd Invest.